Hey, today is Tuesday, March the 24th, and this was not an unexpected day because the Congress is supposed to pass this $1.6 or $2 million stimulus bill. The market is buying the rumor, but they may sell the news. So be careful about that. Although, it's more than a rumor, something's going to happen. Nonetheless, the market does sometimes tend to anticipate, and then when they get what they want, they take their profits. And that is entirely possible today. Advancers to decliners were 9-1. That pushes our market breadth up to the neutral line, which is quite significant. Let's see how it handles that kind of a bounce, and look at what happened to the bounce in the New York Stock Exchange Composite. Let's look at our other indicators, which we missed yesterday. Let's look at our summation index. Forget this bounce back to zero here. The fact is that today we finished at 28.3431, negative 28.3431, which is quite a bit lower than where we were in December of 2018, but not as low as we have been in the worst of times preceding the final drop in 2009. Does this mean that we are on our way to a bounce back from one of these? Well, the only way that's going to happen, if you remember how the summation index is calculated, let's take the summation index and let's look at the calculation. It takes the McClellan oscillator and adds it to the previous value of the summation index. And since the McClellan oscillator had a minus 24, which isn't all that bad, because look at the minuses we've had. We haven't had a minus 24 since February the 20th, when it was a plus 8, or minus 61 on February the 21st. So this minus 24, which you find right here on the McClellan page, is what we're adding to the previous summation index, which was 2810, which gives us 2834 negative, today's summation index. So the summation index is still going down, and we're looking for a bottom. So the only way that's going to turn around is if our summation index has a positive value, and then we're going to see a change. So we need to see our summation index has to have a positive value, and at minus 24 we could be heading there tomorrow, or not, and then we would experience some kind of a bounce. We've seen what bounces do in the past. Let's look back at 2007, and you can see summation index with a low, a higher low, a higher low, then a lower, 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 higher, 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 and then the market moves up. So once you start experiencing the moves in this direction, but they're not all linear. You go up and then down, you go up and then down, but what you look for is higher lows. This one, this one, this one, and then this one, and then the market started moving up. So that's what we're looking for. We're not going to see a straight shot of the summation index, going to the moon. Let's look now at the charts. The S&P up 9.3% today. Some said it was up 11%. Well, the Dow Jones, I guess, was up 11%. The S&P was up 9.38%. But where did it stop? Right at the 8-day, perfectly at the 8-day EMA, the extended moving average. So let's consider that could be resistance, because normally the 8 EMA is resistance. And if you look here, once we lost the 8 EMA back in February, the 8 EMA proved to be resistance. Right here, one day we ended above it, and then we just dropped, tried to hit it here, and then just kept dropping. So the 8 EMA is powerful stuff. Let's keep an eye on that. Apple, let's look at the VIX before we do. The VIX took a nice drop, and we're seeing a very healthy drop. and return back to something that we can live with, it means that the price of options is decreasing, or is at least not being influenced by the volatility component of the Black-Scholes equation. But if you look back to 2007, 2008, it doesn't mean we can't continue to have some spikes. We can drop like we did here the week of October the 26th, only, and we drop the following week, only to jump up the following 2 weeks. So watch for this rock to skip, and we may have a volatility index drop this week, maybe even next week, but that doesn't mean we're out of the woods yet. Apple 246. Anything significant about this? Yes, it finished above the 50-day simple moving average, but it was stopped exactly at the 200-day simple moving average. It came down and tested the Fibonacci 68.1, which is also this green line that we drew last week, which shows previous areas of resistance back here in 2018, and then resistance for 1, 2, 3, 4 weeks for a whole month back in September of 2019. That area proved to be support today. But look at the volume. That's the weekly. Let's look at the daily volume. The daily volume was not convincingly high. It was not as high as the selling volume for the previous 3 down days. That's a bit of a concern. So all those sellers were not necessarily all buyers today. We'll keep an eye on that. The REITs did really well. AG&C itself, the common stock, is up 6%. The preferred share N series was up 2%, but the P series was up 8.6%. That was pretty nice. Caterpillar had a really nice day to finish neatly at exactly $100, up as much as the market, 8.8%, and finished above the 8-day EMA. So that's a significant move. Let's take a look and see if the volume tells us anything. The volume was a little bit more than the selling we saw yesterday, but not as much as the selling that we saw on Friday. So people are cautiously moving back into Caterpillar. Coca-Cola, Warren Buffett's favorite stock, ended up possibly having, it did have an up day, but it didn't do as well as it should have. It started the day at 41.16 and it finished the day lower at 39.45, which is the 50% support line, right exactly at the 50% Fibonacci line. And it came down yesterday to test this green support area, and we stayed above it today. Let's go back to the daily. We stayed above that line today. But this shows weakness in Coca-Cola because unlike other stocks which were up and stayed up, Coca-Cola did not stay up for the day. AT&T up 4.7%. We're all waiting for news of its dividend, which should be coming out sometime this week. And that's going to be a big tell. If they keep their dividend for the quarter, you're going to see AT&T rocket probably back up to this previous resistance level of 31.63. But we've lost a lot in AT&T. And I took my shorts off today. I sold some September 38 shorts, and they were only worth 18 cents, so I took them off. I may put on December 38 shorts in anticipation of a further drop in the stock. So that's something I'll look at first thing tomorrow, depending on how the market goes. But AT&T finished up well off of its low of the day, and so it was nice to take off those shorts. Home Depot, I continued to add today. I bought 100 shares and sold the 185 calls. I bought 100 shares and sold the 190 calls. So my average cost is not too bad. I now have 400 shares in Home Depot, and I'm going to continue to add like that because I really think this is a stock that's going to be part of the recovery leadership. Look at the gap today. We had a gap. Let's draw the gap in there. Let's not. Let's just save time. I'll draw the gap in later, but this was quite significant. We have another gap up here around 206 to 208, which is at the 14.6% minor Fibonacci. But the key thing is here we stayed above the 38.2%, and we stayed above this green area of support. We sure didn't want to go back down to this 118, that area of support, but it looks like that could be behind us. Whirlpool up 30%. Holy mackerel. Let's look at it on a daily basis. The weekly SMIs show a bounce, but the long-term SMI is still in free fall. The dailies both show oversold, so you would expect some buying to happen. Let's look at the volume. Was it significant? And it was. Unlike some of our other stocks, we saw more buying today in Whirlpool than we saw selling volume for the last 4 days. Not cumulative, but we've seen it coming back to these types of volumes for these buying areas back here around the middle of the month. So I'm not sure when Whirlpool's next dividend date would be coming, but obviously somebody has some news, and that was significant buying for Whirlpool in a stock that we didn't expect to recover until people actually go out and can do some shopping. People are not going to be buying appliances off Amazon. This is the kind of thing that they buy at Best Buy, Lowe's, Home Depot, and other white goods stores. Google up 5.4%. Shopify up 13.75%. That's a stock that I've moved on from. Probably not a bad thing to take a look at, but I would like to get into eventually into Cisco. And Cisco was up 11% today. So let's watch Cisco. Let's draw some areas of support. This should have been an area of support, and in fact it was. The next area of resistance you would think would be right here with these points right there. And let's see if that is an area of resistance around 40. So Cisco, which has a fairly decent dividend, take a look at it, but is a company that could be something that's affordable because it's $38. You can buy a lot of them. It's got a good dividend, and it's way off of its highs. Let's take a look at a Fibonacci. Let's take this point, which is certainly a good one because it matches here. Let's take a low point here. Let's go to our weekly, though, and make sure that we've got the correct low point. Well, we could take that one. We could also take this low down here, which I would tend to want to do because it matches this, this. So that's going to be our new value. Let's get rid of this one. Rather than talk about a recovery back to this point, let's talk about a recovery back to this wave here. And we did not hit the 61.8%. You know how I like to have Fibonacci lines fit. Do we have a better fit? Well, I'm not sure that it's fair to take that as a wave, although we did have a channel here. So we channeled for June through January for 7 months. You know, it might be fair to take that one, but I'm still going to live with this one. And we're going to keep an eye on this 38.2%. 41 should be our next area of resistance, and look that it's right near where we've drawn that green line. So let's keep an eye on Cisco. If you have some spare cash, Cisco might be the stock you want to look at. What to expect tomorrow? Tomorrow, the Senate should pass and turn over to the House to vote on the bill, but I heard that Nancy Pelosi is in agreement with what Schumer and Mnuchin have negotiated. So the House could quickly pass what the Senate passes, but be careful for buy the rumor, sell the news. There is more bad news to come with the coronavirus thing. Let's keep an eye on the numbers.